the money you have had in the bank, in your savings account or checking account, for the last 5 years, every dollar is now worth 78 cents. So if you had $10,000 that you've saved over the last 5 years, it's now worth $7,800. Now you're thinking to yourself, that's not true. I can look at my bank statement. I put in $10,000, put in $2,000 a year for 5 years. I saved that money, feel great about it. You should. And it still says I have $10,000. So, Brian, you're lying. No, I'm not. Because of inflation, cars have gotten more expensive. Homes have gotten more expensive. Food has gotten more expensive. That is a 22% cumulative inflation. I believe it's worse, but that's what the numbers say, over the last 5 years, which means you can buy and afford less stuff until you understand that basic fact that the government takes your money through inflation. You will never beat the system. You will never come out ahead until you understand this simple rule. Yes, it's obvious when the government says, pay us taxes. You owe us $1,200, write us a check for $1,200. That makes perfect sense. You have $10,000 in your account, you write a check for $1,200, it goes away, now you have $8,800 in your account. That's obvious. But inflation is the secret killer. Inflation is the secret theft. That's how they get you. I always say, banks don't care about you. Governments don't care about you. It's up to you to take control of your finances and your financial freedom, because real freedom is financial freedom. So if you would smash that like button, I'd appreciate it, and subscribe so you don't miss any of these. I call this the dollar is dead because I'm trying to make a point. Dollars are transactional. Look at this simple little chart that I show every time that shows that over the last 100 years, the dollar has lost 100% of its value. So how do you get ahead? Well, you want to beat inflation. In other words, you want to get a return on your assets. Forget thinking about dollars. Assets. Because you can turn assets into dollars. The rich hold assets because assets go up in value. The dollar goes down in value. Of course you want to have emergency savings. Of course you need money for the next month or 2 or 3 to pay your bills. But generally speaking, over and above that, it doesn't make any sense. So 3 days a week, Monday, Wednesday, Friday, I go over the dollar is dead. But I want to specifically talk about every Friday. I'm trying to show you since February a basket of goods, if you will. Things that you can turn your dollars into so that they will go up in value. Quick example, and then we're going to get into it. Like I said, over the last 5 years, your dollar is now worth 78 cents. However, if you've heard of the S&P 500, Standards & Poor's 500 companies, you can invest in a fund. You can go onto your broker and buy a fund of the S&P 500. Many people have written books about this, about how the fact that it, I think on average, returns maybe 12 to 15% year over year. It does great. But over the last 5 years, if you had bought with your dollars, in other words, turned them into shares of these funds that invest in the S&P 500, it had 114% return. Every dollar you put in would be now worth $2.14. There it is. I just laid it out for you. The rich don't hold dollars because their dollar would be 78 cents. So for everyone that held on to all their dollars for the last 5 years, each dollar is worth 78 cents. And the rich people that turned it into assets, it's worth $2.14. That's how they get ahead. They understand they need to beat inflation. Okay. You're probably thinking, well, how do I do that? That's a rich thing. Not everyone can do that. Well, since February, I've been showing this basket of goods. Look here. I'm going to show you that we're going to compare a dollar to inflation, which year over year is around 3%. But a while ago it was much higher. But we look at savings accounts, checking accounts, and treasuries, which are basically dollar equivalents. And you can see here, these numbers change every month, but it's not much more than 1.5%. Treasuries, however, give you around 5%. So you're barely beating inflation. But if you look at these other commodities here, gold, silver, and I use some crypto for those of you that are interested, Bitcoin and Ethereum. I buy these things. I buy them on a regular basis every month. Look how gold went up from $2,000 to $23.91. substantial increase. Silver from 22 to 27. Bitcoin from 43 to 67. Ethereum from 22 to 32. The Dow Jones from 38,000 to 40,000. S&P 500 from 49.58 to 54.45. Inflation is still around 3%. Okay, why am I pointing all this out? Because if you had taken your dollars and then turned them into these assets, they go up in value. We just showed that the S&P 500 turns your dollar into $2.14. Now, noting it, understanding it, seeing it is simple. How can you do it easily? You might be thinking, okay, I have to go buy physical gold from some sort of a store. Actually, I think Costco now sells physical gold bars, but then I have to go sell them. There's transaction fees. It takes time. What a pain. Same with silver. Bitcoin, I got to figure out how to use one of these wallets or exchanges. None of that makes sense to me. Guess what? I have a link down below to an article which shows all of what's called the spot ETFs for gold, for silver, for Bitcoin, and for Ethereum. So if you were interested, the way the ETFs work, the exchange traded funds, you can go on to any broker that you may have, T. Rowe Price, Fidelity, IBKR, whomever, and you essentially buy a share. Just like you were to buy a share of a stock, you buy a share of the ETF. And the reason they're called spot is because for every dollar that goes in, they have to buy $1 of that underlying asset. So you buy $100 worth of this Bitcoin ETF. They then in turn have to buy $100 worth of Bitcoin. Now they all have fees, but they're fairly low because they're just buying these underlying commodities. And now, just recently, the last one was Ethereum. So Bitcoin and Ethereum, if you're not familiar, in the crypto space, they have the largest market caps. Total Bitcoin market cap, I think, is over $1 trillion, and Ethereum is somewhere around 400 or 500 billion. So those are the largest market cap ones. I buy those, I might buy many more, and I have a show I do just on crypto. But generally speaking, if you want to try the strategy of putting some of your savings into these commodity alternatives like gold, silver, Bitcoin, Ethereum, they're not guaranteed that they're going to go up. They do go down, they go up, but over a long time, if you what's called zoom out and look at a chart over time, they all go up and to the right. So they're all increasing over time. So you may not want to put money that you're going to need next week, next month, next couple of months, maybe not even next year, but for long-term savings, you put it into alternatives like these. Now, I always give this warning. The reason we look at the 2-year treasury, the 10-year treasury, and the inversion tells us whether or not we're in good or bad economic times. Obviously, since all these things are going up, you might say, well, that means the underlying market's good. Well, if there's an inversion in these two rates, the 2 and the 10-year, typically that means that we're in a recession. There might be job losses and that sort of thing, so make sure you do have your emergency savings. But what I do, and I always say this is for informational purposes only, entertainment value, I'm not telling you what to do, I'm showing you what I do. I invest in these alternatives because that's what the rich does. I don't want my dollars to be worth 78 cents. I want them to be worth $2. So that's what I do. I buy these commodities. I hope this is helpful. I hope I pointed out that how inflation actually works, how you can compare it to alternative investments. Please subscribe so you see this every Friday. And I think eventually if you start to implement these things, you'll get a better understanding of how they work if you were to choose to do that. Have a great day. Like I always say, government, banks, they don't care about you. You need to take care of your future, and I hope you do.